of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I posted a chart here just to have some fun. Shane Smolian's going to be our guest today, and tomorrow we have, oh my goodness, I didn't write it down, but I know he's going to be on. Son of a gun. Let me think of it. Just Stan Harley will be our guest tomorrow. Sorry, folks. I've got it written down right here. It's the 3rd of February, not the 10th. Oh, boy, it's wonderful when you do things with the calendar, right? I posted a chart of the artificial intelligence program that I use, for intraday trading and stuff, and it shows that the stocks are supposed to be making a top up in here. You can see that small little ABCD. What's good about this is the risk is really small. It might not work, but that's pretty good. So we'll just move on to the next one. I want to show you a couple of things that occurred today that were very, very important. First of all, we're going to take a look here at this NASDAQ. Remember, folks, I have been very bullish. I came in bearish on Monday, and we covered everything, went into Tuesday and Wednesday, and made a good move down and a good move up. And I gave 30 points back out of the 160 that we had made. So we made well over 120 points in the S&P here in the last couple of days. But look at this NASDAQ. You can see here we were sitting right at the 61% retracement here this morning before the opening. And then all the opening calls were, these earnings are going to be good for everything. And you can see what happened here with the NASDAQ. And that's what propelled everything up. Now, it hasn't done much to the, hold on just one second here. It hasn't done much to the Dow Jones, but it's moved the S&P up quite a bit. As you can see here, we exceeded the ABCD pattern here by about, oh my goodness, I think about 60 or 70 points, maybe even 100. But you can tell that by the way it exploded. You see that wide-ranging bars into that? There's two reasons why you don't want to sell point D, folks. One is if you have real wide-ranging bars into it, and the second reason is if you come into a market that is got a big gap. Those are big unknowns, so people they're not unfamiliar with these things. And so, they know what these algorithms are, and they just go through those numbers like they don't even exist. That's an important concept to remember. Let's take a look here at a trade we were looking at yesterday. Give you an example of this. And you'll see on this particular move, when you look at the ABCD, that happens to be the euro. We were watching it on the air yesterday, folks. And there it was right up there at 110.18. That's where the high, I think, was 110.22. It's made well over $1,500 today. Beautiful ABCD, filling it up right in there. No wide ranges, no gaps. That's one of the good parts of Forex most of the time. So those are the things that you're looking at. I had two questions last night about the frustration that during the Fed time we were long and we put our stop after the market moved up about 40 handles and it came down, took us out for a 7-point loss in the S&P, and then it proceeded to rally 100 handles. And people ask me, does that upset me? And no, that doesn't upset me too much, but nothing upsets me because I know there's another opportunity, that goes down the road. But let me show you what does bother the heck out of me, because if you miss that, you say, oh, why did I get stopped out, on the low tick? Well, boys and girls, there's things happen in this world, and sometimes they're not the way we want to see them. Here's what upsets me. Here was the gold that we've been waiting for so long. You can see the number up here, folks. We've been talking about 1977 here in the gold for a long, long time. And the high was 1975, and it dropped $50 today so far, and it's still going down. That bothers me. And I know one of the things that, the fear of being wrong, fear of missing a move, fear of losing, but fear of missing out, that is something that you say, doggone it, how could I miss that? And not only that, but on the way down, there wasn't even a whisper, I mean a whisper of a 382 retracement at all, nothing. Okay, so that's another one that, frustrates me, but I get on. But it's been an emotional week for me since last week. And, I'm still reeling from missing my good friend, Eddie Horowitz. But let's take a look at some of these markets that we've been watching. And just to show you why I like ABCDs, and, you'll be able to see some of these because we've posted these for the last 3 or 4 weeks. You'll notice we were talking about these big ABCD patterns happening in Apple. Look where Apple is right now, folks. It's almost up to the 61% retracement. It's at the 78% retracement of this move, and it's approaching the 61% retracement of the next move. Okay, hold on here a second here. Something is beeping, and I don't know what it is. Can you give me a 10-second here to look at this, and we'll see what's happened. I don't see. Where is it? Sorry, boys and girls, it must be something that's important because it's. Give me a second, folks. I've got the beeper on. It only beeped once or twice, so I wonder what that is. Anyway, I'm not gonna. All right, let's not worry about that. Okay, let's move on here to the next one over here, and because I want to talk about each one of these separately because they're that important. The next one we're going to look at here is Mr. Used to be Facebook, and now it's Meta. We'll get this up here. This stock has hurt a lot of people on the downside, folks, much like some of these others. But look at this thing was way up here, 400. Look where it is trading now at what? I can't even tell the price. Just a second. I put it in here. It's trading at 190 after being at 384. So it dropped all the way down, believe it or not, to 85. And we've doubled in price now. And as you can see, the ABCD, we didn't bring this one up because of the gap that was there, but it made the ABCD. But look at the one, I thought the best trade of all down there in January, when we were bottoming in January in Amazon, was this one, because this had every possible thing to tell you that Amazon was getting ready to rally. And I'll get this up here to show you that was one of the reasons why we were relatively bullish the stock market, was because you had all these ABCD patterns. Look at this giant ABCD there. You got a beautiful butterfly pattern. You come right down here. It measures to 81 and 3/4 or something, and the low was 81.40 or something. And now look where we are. We're way up here. We're up over 20% in just a matter of this is a month. So maybe this is a start of something big. I don't know. All I can tell you is it certainly looks better now than it did, way down there in January. It looked like it was never going to go up. Okay, the next one we're going to take a look at here, let's get it up here, is Mr. Tesla. This one we were very strongly recommending, and the reason for that was, hold it, let's get it up here so we can see it here. Let's just do the next one here. I think this is Amazon. Oh, I had them in order, and then there we go. Here comes Tesla down the road here. 1 second. Don't trust a car that you can't hear. And here we are. Well, the only thing I have against these electric cars is, boy, if you have to get in a road and you run out of electricity in the middle of the road, you can't carry an electric can. Maybe they have a battery for it. I don't know. Hey, let's take a break. 877-927-6648.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, without further ado, we have on the line Mr. Shane Smolian, thewolftrader.com. How are you doing, young man?
Is this Duke and Duke?
This is it, 100 South Broad Street, Philadelphia, Pennsylvania. How did the birthday party go when you rented the gymnasium? Did you have a good time?
Oh, yeah, it was great. It was perfect.
Yeah,
we had the perfect amount of kids, and
that's good.
The coach showed up and gave the kids some lessons. It was a great time. It was a real good party.
Okay, good. Well, I'm glad to hear it. Tell us what you got for us today, my friend.
All right, I've got quite a bit of information here. So let's get started with our friend, the S&P 500, because I think that's on everybody's mind usually. And so the S&P 500, I'm just going to pick up where I left off last time. Early January, I came on and talked about this. The basic summary here is that the S&P, the bear market, it's likely over in my estimation. And we had these long-term shorts that were from last December of 2021. We covered those in October. And then these Fed internals went into the buy in late October, and there was a major shift in terms of what the Fed was doing, and also other central banks around the world. The Bank of England stepped in and provided support for the gilt operation to bail out these pension funds. And we're starting to see a shift now. We're starting to see the Fed taper in their rate hikes. They only went 0.25%. We're seeing Bank of Japan start QE. So we're starting to see a shift now in the attitudes, even though it's somewhat slowly happening. It's happening. And the Fed really hasn't done much with the mortgage-backed security market, which is interesting. They were supposed to be tightening that. They really haven't done much there. I think that the Fed is pretty much coming to the end of the cycle. There's probably maybe a few more hikes to go, but for the most part, what's going on behind the scenes is what's interesting to me. Now, there are positive election seasonals. So this is something that's a phenomenon that does go on through April. So typically when there's an election, there are positive markets. So I was expecting this market to rally going back through last November when the Fed changed and the Fed internals went into a buy. So I'm still overall bullish on the S&P. There are some short-term concerns going on right now, which I will address. But long-term, I think this thing looks very good. I think the Fed's in a really good position right now. They have a lot of bullets in the chamber, so to speak. And I just think that long-term, the S&P is in a pretty good setup right now. So that's just kind of where we are now. Market update here. Let me just give you an update here. Again, I think the bear market is likely over. We might get another test lower, which I'll get into on that, but I don't think it's going to be a major plunge lower. The jobs report tomorrow, so everybody be aware of this. There's a jobs report tomorrow, and there's a hard aspect, which is Sun-Uranus square, and that produces bad outcomes for the S&P. I'm going to show you the test for that. I actually did an efficiency test to show how does the S&P behave around that aspect. But Sun-Uranus is really a volatile aspect. It's unexpected, harsh moves. And statistically, the markets don't like it, at least for about 5 days after. So keep in mind that that's going on tomorrow. There is still strength, though, early in the month until about for another week or so. I would say we've got some cycle strength. But then we hit a major seasonal peak. So around the 10th and then the 18th, there's a major seasonal peak in the S&P. I'm going to show you a graph here. This is the actual seasonal graph of the S&P. This is the solar cycle. And you can see here that once we get to the 17th of February this month, there's a big plunge. And this is one of the biggest drops of the year on the solar cycle. So I think there's a good chance that our S&P here is going to try to make one more test lower. I don't know if it's going to push to a new low or not, but I don't think it's going to be something that's going to continue. I think if it comes back and retests, I think it's going to solidify a low. And then after that, I think there's a chance that this can go higher. Now, I do think that we might actually top a little bit before, maybe about another week before this, maybe around the 10th. But this is significant because I like to look at the seasonal patterns, because the seasonal patterns give us a general idea of, kind of like the big picture. What does the market normally do at different times of the year? And right now, it's coming into some type of a peak here on the 17th. So I know everything's really excited right now after that Fed meeting, and everybody's excited and the market's going up. But I do think we're going to have some type of a back retest here before we go higher ultimately. Now, there is a negative divergence, which I'll get into. This is based upon the Fed internals, and this started at 38.48. So I think that's where it's going to go back to, 38.48. I don't know if it's going to go much lower than that, but I think it's got to go back to that level to retrace, to resolve this divergence. And I'll get into the divergence in a second, but these divergences based upon what's happening with the Fed, they almost always resolve. They resolve to the upside, they resolve to the downside. And so this is why in December I was telling everybody this is still very bullish because we had a positive divergence, but now we have a negative divergence. So this is a medium-term phenomenon here, and I think it's going to play out. So I think, once we get to that seasonal pattern, once we get to this period into here, I think S&P will try to come back and resolve. But then I do think there is a chance for this to head higher in the long term. So that's just kind of what I'm seeing right there for the S&P here. Now, fear and greed index. Let's talk about this, because last time when I came on the 6th of January, we were really in more of a fearish neutral position, and I was talking about, this is still a bullish setup here. There's still these positive divergences happening, and now we're really kind of pushing over here into the greed aspect. I mean, this is probably extreme greed by today. We're probably above 75%, probably by the close today. So from a sentiment standpoint, this is ripe for a short-term pullback. And we also do have this new indicator that we're looking at. The best RSI hook is in a sell today. So I think short-term we could start to see some type of a pullback. But when we talk about the long-term, I still think the sentiment is pretty negative out there. I showed this last January. I took some screenshots, and I'm not picking on any particular person here. I'm just taking a sample to show on the long term, the sentiment going into this year was very negative. And pretty much everywhere you went, they were talking about how the housing market's worse than 2008. It's a 70% drop coming in housing. There's a 2023 crash. Don't buy anything for 18 months. Be ready for the crash. I mean, all of this was the negative bombardment that comes people's way right before the new year. And at this point, I was still telling people, no, I'm very bullish on this thing. I think we're going to be headed higher. And for the long term, I still think that's true, even if in the next few weeks we do have a pullback. But this is something to point out. When you go online and all you see is the same message over and over and over and over and over, and everybody's talking about the end of the world being here, that's usually a sign that that there's a low, at least a short-term low is in. And so I don't think we're going to repeat a 2008. I don't think it's a totally different Fed setup. We have, with quantitative easing and the mortgage-backed security purchase, it's a totally different ball game now than we saw in 2008. And I don't know if that's even possible to repeat that, because the whole infrastructure has changed since 2008. So we got to be careful about this. When we go back and look at history, even when we go back and look at past historical rates of bonds and treasuries, it's a totally different environment now. And so we can't just go back and look at something in the past and say, well, that's normal, and we're going to go back and repeat what happened before, because everything has changed. Yeah.
Hey, stay with us, folks. We're going to
Sure.
take a break. We'll be back with this wolf trader himself, Shane Smolian, right after this short break.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Bye, Bev. Bye-bye. Okay, I think we're back here almost. Okay, we're back with the wolf trader himself. You there, Shane?
All right. I'm here. Can you hear me?
Yep. Go right ahead, my friend.
All right. So this is a chart that I do like to show people because it is of interest. This is the 50 versus the 200-day moving average. Now, I think this is important because this symbolizes to a lot of people an important cross in the S&P. And the S&P has not crossed below this. This hasn't happened. Even during COVID, this didn't happen. So when it crossed down, that was what's called a death cross. This crosses back up. People call this the golden cross. I think this is something to note here. So be on the lookout for this, because you could get some type of a FOMO event where people are worried about missing out here on this market. Now, the NASDAQ is a little bit behind on this, but I just want to point this out that in the next few weeks or a month, when this crosses, I think people could get really, really excited about the market here. So just keep in mind that that's out there. You can put that on your computer and keep track of it. Okay, so astro events. I do want to talk about this Sun square Uranus aspect. This is what's coming tomorrow. This is a pretty hard aspect. It's unexpected outcomes. So the markets typically do not like this aspect. So the markets tend to sell off on this aspect. This is tomorrow across the jobs report. So that's a pretty negative aspect, at least on the short term. And then also when we look at the solar activity in terms of what's going on with the sun, the sunspot activity, the solar flares, there's not too much activity going on here. So I just wanted to cover that just to kind of give everybody kind of an idea of what's going on. Now,
could you repeat the aspect one more time, please?
This is Sun square Uranus, and this is the backside square where the sun is coming from the backside. The markets
Does the negativity come from the planet Uranus, or do they know what that is?
Well, Uranus is okay. So I will put a caveat out here. Uranus is it's unexpected. You don't know with Uranus. Okay, it could go either way. Okay. But based upon the studies of this, when we look at the statistics of this, the market tends to sell off. So that's what the market does on this aspect. Now, there are some divergences of concern here. The big one that I'm looking at here is the Fed. So the Fed, this is the Fed internals. I measure the Fed operations, and I have something called the Fed juice, which is a neural network based upon what the Fed is doing. Now, what I'm concerned about here on the short term is you can see that the Fed starts to come off here. This is in October here on the 28th. This is when I think the bear market ended here. This is when the Fed changed their stance behind the scenes. Now, you can't see this based upon Fed press conferences or the rate hikes. This is what I measure. I measure Fed data every day. So they changed their stance back into here. And this is when the Bank of England was helping out the pension funds. And so and I came in and I told subscribers, hey, I think the bear market's over. This was right around the CPI report. We covered the shorts way down into here on this. Now, we start getting this positive push up. You can see here, this was December. Fed kept pushing up. And when this was going down in December, I was telling everybody, I said, look, they're still pushing higher here. This thing's going to hook back up. And of course, it hooks up here, right? But now we have the opposite phenomenon going on here. So we can't just look at the positive. We have to look at both sides of this. And when there's a negative phenomenon here, we have to look at that. So right here, this is when the S&P starts this little rally here. You can see the Fed internals are plunging here. You see this? So this is a negative divergence that has been forming on this S&P, and this forms right around 38.48. So what does that mean? Well, long term, I still think we're headed higher. But short term, I think the S&P is going to have to come back down and resolve this. And I think that's probably going to happen in the end of February, my guess is. These divergences almost always resolve. And so I think it's a pretty small one. It's nothing major. But once it resolves, then I think we're going to have the chance here for this bull market to really, really take off. But I don't like this. Okay, if I'm looking at this as a technician, I don't like the fact that we have this huge, I would say not huge, medium-term divergence, and I think that has to resolve. The markets since 2010 are pretty much in lockstep with whatever the Fed does. So it's a pretty tough call there to try to go against what the Fed has in store for these markets. So just something that I point out to everybody, it is a divergence. There's also a small divergence here with the money flow. You can see down here that the money flow is kind of running flat to down and the S&P is going up. And again, if you look at this divergence here, this one essentially starts at a very similar area into here. This is the 3,900 area. So I think there's a good chance we come back down before we go back up. So that's just something that I'm looking at. The problem with divergences is they can go on for a long time. So the timing of them is a little bit tougher. I have a new Wolf Spread Trader that I look at that looks at the difference, the pairs trade between the S&P here and the VIX. So the VIXY volatility. This is an ETF that people trade. But you can see here, this gives us some medium-term signals here, and you can see that the S&P is still relatively strong here relative to the VIXY. So it's long S&P, short VIX, and you can see here on this histogram, this is still pretty strong here. So I think on the medium term, it looks we're still looking pretty strong here. This is a daily chart of the S&P here. We still have some cycles pushing up. Back here, if you go back here all the way back to the beginning, you can see this is really where the Fed turned, the internals go up here back into October 28th. We do have some recent cycle action here. We have the quad lunar and the planetary speed index both in a buy. So again, this is why I say I still think we might have some positive action to the 10th to the 18th. Except for that Uranus square, which could be a short-term thing. I still think there's some push higher here, but I do think at the backside of February, I do think the S&P is likely going to come back down. So just something to be aware of if you're looking at this from the long term. Now I do track the volatility also, and the volatility, the VIXY, this quad lunar is still in a sell right now, so the volatility is showing this falling, and it makes a low around February the 8th. Which is right around when I would expect the S&P to be topping. So that's kind of an interesting correlation there that we could look at for the S&P 500. Now, are we ready to talk about gold? Who wants to talk about gold?
I would like to talk about gold.
Okay, so I put gold and Bitcoin together because I think these two, when we look at the next decade, they're going to become intertwined. I think they already are. I think you got these two opposing viewpoints, but I think ultimately, I think we have to look at these together when we look at gold. Okay, so in the big picture, I think the gold bear market is likely to resume soon. So people might say, "Oh my God, bear market? What are you talking about? It's been rallying." Well, gold is in a positive seasonal, which we expected this to rally. This is through the 23rd here. It's 23rd. Gold is supposed to be going up until the 23rd. We're rapidly coming to an end here. And then you could have it. There's a 5-year cycle that's lower, and there's a 10-year cycle that's lower. So gold really, in the big picture, has some issues. And so I know people like gold, but I just think that gold is a tough one, man. If we look at the long-term pictures here, I did an actual study on this where I looked at different cycles. So I looked at the Saturn cycle on Bitcoin, and the Saturn cycle on gold. Saturn cycle on gold here is pushing down till 2030. Okay, that's a long way down. So there's a big drive down coming on the long-term cycle of gold. And then even if you look at a shorter-term cycle, which is a Jupiter cycle, there's another push down coming on gold to 2025. So I don't like gold right now. I think gold is going to be struggling here in the coming period. Okay, so once we get past this February 23rd period, I think gold's going to have some issues and some headwinds. Now, why did I talk about gold and Bitcoin?
Hey, we got a break coming up, my friend. Let's have the break here. We'll be right back, folks. Shane Spolian, Wolf Trader. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks. Speaking with Shane Smolian, wolftrader.com. Please continue. You've got our attention.
All right. So the next thing I want to talk about the Wolf Spread Trader with Bitcoin and gold. So the Wolf Spread Trader is one of the things that one of the services we provide to give these pairs trades. Now you can see here that gold and Bitcoin make these beautiful pairs trades. So this goes back to on 11/8. You can see gold goes into this buy, Bitcoin goes into this sell. But right here on the 10th. We were able to give everybody the heads up about what was happening with Bitcoin, that we were about to have this breakout here in Bitcoin, and gold was weakening on a relative basis. Now, gold did kind of chop higher here, but gold is starting to look a little ragged here. So, again, I would just caution everybody about gold. I know it's everybody's favorite commodity to throw into their basket and to say, hey, I like gold, but be careful with it. I just don't like it. I think it's got many years here where it's going to struggle. I think eventually it will base and we will get some type of a low, but that could be 5 years off. But I think at some point before that, it's going to struggle. It's not going to be what you think it is. Now, going back to Bitcoin, I did put this was put out in the January newsletter. I put this out and I told everybody, I said, look, the negative divergence has resolved. Bitcoin is at a low. This was right before it did its big breakout. And I told everybody this in beginning of January. I said I thought Bitcoin was bottomed out. It was at a low. So I think that's what's going on there. If you look at gold here, the Fed juice on gold, this is February the 1st. The Fed juice just went into a sell yesterday. Now this orange line up here, this is the chart that we post every day for subscribers. We have the daily statistics over here. Then we have the long-term solar cycle here. So this is what I'm going to emphasize. The long-term solar cycle here, you can see that this is really coming to an end here. This is 223. And I think gold is really going to start to struggle after 223. I think you're really going to have some issues. Now, we have these shorter-term influences. We have the Fed juice, which does very well with gold. We have the quad lunar cycle. But I think the thing to pay attention to here is this solar cycle. And I'll show you another view of this. Let me see if I can get this for people in terms of the actual look of this. Metals here. Give me a second. I'm going to pull this up. So gold solar cycle, it's very prominent the way that it peaks. I'm going to show this to you here. This is the solar cycle here. Again, this is information we provide subscribers, but we'll provide the next 6 months. We're coming up to the end here. But you can see it's very prominent. Once it hits that 223, that's the end. And the fact that we've got this 5 to 10 year drawdown coming, I don't like it. I just think you should be careful with gold. I think crypto is going to be in fashion again, and I think as will the S&P. I think they're both in fashion. So the quad lunar cycle, and it runs up until the 6th, and then it falls back down again. And then I do want to show this divergence. Now, This is something that I use. This is it's a MACD, right? But I normalized it. So I basically created a normalized version that can handle these huge price swings. And when you do that, you can see these divergences that happen here. These things almost always resolve. This is how I knew Bitcoin was finished at the low there and it was going to rally. This gold has a huge one down to 1,100. I think that's where we're going. I think gold's going to go back to 1,100 or 1,000. It's going to take a few years for that to happen, but I just don't like it. I mean, there's no chart that I can look at with gold that I can tell you, hey, it looks bullish, it looks great. I don't like it. So I hate to throw a rain on your parade if you're a gold bug, but I'm just want to warn you guys that it doesn't look good for gold on the long term. And I've looked at this from many angles. I look at many different cycles. It's not just my opinion that I like or don't like gold. I'm neutral on this stuff. I just look at whatever the data says. That's what I go with. Okay, let's look at natural gas. So natural gas has been in the news. Natural gas has been falling. And the Fed juice on this has been in a sell since December 23rd. Now this is an interesting one because it's still in positive seasonals. In other words, this has been falling with positive seasonals. But I do want to let people know that there is a solar cycle low coming in the middle of February. So if you're looking at, I'll pull this up for you too, because we're coming to the end of these. If you're looking at natural gas on the long term here, this is the solar cycle on natural gas. Natural gas is going to make a little dip here on 210. I think there's a good chance that we might reach some type of a low there. Now, this is a falling knife. It just keeps going down and
Time
down
out.
and down and down.
Shane, I can promise you it's not going to be reaching a high.
Yeah. Well, yeah, we've got to look at the lows at this point. We're looking at the lows. So 210, I think, is a candidate. Now, one of the other things I like to look at, too, I'm going to pull up the chart. Well, actually, let's go back here. The double lunar cycle also makes a low in the middle of February. So I think in the middle of February is going to be your best chance from timing this thing from a cycle standpoint. But we also have the BAT. The BAT is an indicator that we use. It's called the breakaway trader. It's trailing it down, and so it's currently at 401. The reason I like the BAT is because it's going to trail that thing down, and it's going to time the breakaway on that. So the BAT is an indicator that we use. It's a trading system that will help identify that. But by combining the solar cycle and the double lunar cycle, again, I'll show you that this is the double lunar cycle here. You can see the double lunar cycle hits the low on February 15th. If you put that together with the solar cycle, and then you put it together with the BAT, you have a good chance here. This is the BAT. So it's called breakaway trading system. And this system is beautiful because it doesn't try to pick lows. It just trails it down. And so you can see natural gas is down here at like the 2.6 level down here. It's way down here, right? So instead of trying to pick a low, what this will do is this will keep trailing it down. Okay, this is fully optimized. So this is right now it's at 410. And so what this is going to do is it's going to trail it down. And the reason I like this too is that it can project out into the future. So if you project this out into the future, where does this kind of come down to this 2.6 level down into here? Right around mid-February, right into there. So I like that area. I always try to look at different angles and different viewpoints. When they converge like this, I like that for a trade idea. You know, it's just an idea. I mean, it doesn't mean it can't go lower from there. Obviously, you know, this thing was trading at near, you know, if you go back, this was at almost $12 back in November, and it halved, and then it halved again. So, these commodity markets are very wild, but I just think that this at least puts the odds in your favor that, hey, this is a cyclical turn coming, this is a solar cycle turn coming, this is a quad lunar, and then this trading system here will kind of give you an idea of a specific breakout level. And we also have this for the S&P too. So I don't think I mentioned this. Let me go back to the S&P. If we look at the S&P, you can see on this chart that the BAT, this is called the breakaway trade, the BAT, B-A-T, is you can see it's right here. So right now it's on the S&P, the BAT is at 3906. So the reason I like this is because it gives a very specific level. So if the S&P breaks below that 3906 right now, then we'll know that the new reversal has happened on the S&P to the downside. So the BAT is a very important new addition to our arsenal here to help us identify. It's an overlay system, but it gives us a specific price. So I post these each day so I can tell people, hey, this is the price that if it breaks this, it's a reversal. So the S&P still has a ways to go on that, but natural gas is moving down in a hurry down there. And we should also look into oil too at this point too. I think oil, if we look at oil, do we have time to talk about oil real quick?
We sure do. We're going to take a quick break, and we'll be right back with thewolftrader.com, folks. Stay tuned, please.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks. Speaking with Shane Smoley, wolftrader.com. Please continue, young man. You were going to talk about oil.
Oh, yeah. Okay, so...
By the way, we just saw a price of $2.46 on natural gas, so it's still dropping.
Okay. Yeah, I think it will for a few more weeks, but I think we're getting close to a chance here. All right, so big thing about oil and gasoline. This is gasoline solar cycle, so we're coming into the big annual push on gasoline and oil. So I think people should also pay attention to oil right now. I know it's been kind of dragging on the lows here, but gasoline and oil both tend to track each other pretty closely here. So you can see oil, we're at 2.2 right here on oil, and oil is coming right into this 2.9 date. This is where it gets one of its biggest push-ups in the year in terms of the seasonal pattern. So this next month coming up here, February, is one of the strongest months for oil on a seasonal pattern. So just something to pay attention to. I just want to give everybody the heads up that this is a pattern that it's pretty reliable because it's relating to seasonal patterns and energy usage and things like that as we move into, later winter and spring months, that this tends to rev up here. So just wanted to give everybody the heads up on that.
Okay.
Any other questions?
Tell the folks how they can reach you, my friend. You got about 30 seconds, so please tell the folks the best way to reach you.
Okay, so you can reach me at wolftraderfutures.com. And we also have a Patreon if you want to check that out. My email is shane@wolftraderfutures.com. And then every Saturday we have a webinar at 8 o'clock. This one's at 8 o'clock a.m. where we go over new items, new symbols. We go over new trading systems. So we talk about that every Saturday at 8. And then also we have a Zoom session on Sundays where we discuss the Polar R-squared trading system. So check us out, wolftraderfutures.com. And you can also message me there on the website. I'll get back with you as soon as I can.
Thank you, my friend, for joining us. We'll have you on again soon. And tell the little guy, Axton Jackson, to keep up those high scores on the basketball court.
I will. Thanks so much, Larry.
You bet. Thank you, Shane. Oh, folks, we'll see you tomorrow, folks. Stan Harley will be our guest tomorrow. Live every day in an attitude of gratitude, and may God bless.